There isn't one interest rate. There are two, and they don't always agree. The federal funds rate, the overnight rate banks charge each other, set by the Fed. Their mandate is stable prices and maximum employment. Here's how it travels. The Fed raises the federal funds rate. Banks pay more to borrow, so they charge you more: credit cards, car loans, business lines. Borrowing gets expensive, spending cools, inflation cools. Cut it, and it runs the other way. The second rate is the 10-year Treasury yield, the one behind mortgages. The Fed doesn't set it. Here's who does. When the government issues a Treasury bond, someone has to buy it. And buying a bond means lending money, so those buyers are lenders. Pension funds, insurance companies, banks, bond exchange-traded funds like BND, foreign governments, and everyday investors. Together, they decide what return they'll accept. That return is the 10-year Treasury yield. So think like a lender. You're handing over money for 10 years. If inflation averages 3%, 3% gets you nothing. You need more just to break even. So when lenders expect higher inflation, they refuse to lend unless the yield goes higher too. Growth matters too. When the economy is strong, investors would rather buy stocks than lend to the government. Fewer lenders means the yield has to rise to attract them. And supply. When Washington borrows more, it issues more treasuries. More bonds competing for the same lenders means the yield has to rise. Now the payoff. Because these two rates run on different logic, they can move in opposite directions. The Fed can cut the federal funds rate while the 10-year Treasury yield rises if lenders think cutting now means more inflation later. And when the 10-year Treasury yield falls below the federal funds rate, that's an inverted yield curve. Historically, it's the market signaling a slowdown ahead. Remember, when the 10-year Treasury yield rises, the price of existing bonds falls. They always move in opposite directions. The Fed sets the federal funds rate. Lenders set everything else.